morning, children. Hope you all are fine. Yesterday and day before yesterday, for the last 2 days, we have done very important topics. We have done asset, we have done liabilities, we have done income, and we have done expense. Today, I expect you all that you people have already revised those things which have been taught in the last 2 classes. If you people haven't, then I would request you to first stop this video right away over here, revise those first 2 videos, study about it, try to put things into your mind, and then come back to the current video, that is today's video, because today would be a little extension of those 2 topics that has been taught in the last class, plus some more topics will be taught to you. So those who are not very clear with what has been taught in the last class, okay, you can please refer to those videos again, and you can come over here for your doubts and other things. Many teachers of our school, like the email IDs has been given in the website, so you can refer to those email IDs and you can send in your doubts and they will help you out. That's not an issue. You can get back to me also. So please remember that today's class is a little extension of things that has been taught in the last 2 classes. So welcome to day 3. Let's begin. The topic that we are going to start today, let me first revise it for a while. I have taught you about asset. I have given you the example of asset. Asset meant that anything that we possess that is for our use is asset. I have taught you 2 types of assets are there. One is current asset, the other one is non-current asset. I have taught you that there is tangible asset and there is intangible asset. Well, there is one more type of asset, and that is called fictitious asset or nominal asset. So today's first topic is nominal asset. It is also called fictitious asset. That is why I was telling you that this class is a little extension of the class that has been taught to you in the last 2 days. You must be thinking, sir, why didn't you teach this nominal one yesterday and day before yesterday only, and why are you bringing this topic over here today in the 3rd class? It has some reason, that's why. So nominal asset, what is a nominal asset or a fictitious asset? As the name suggests, fictitious. There is no asset as such. So I can say that there is no realizable value, number 1. Number 2, it does not generate no cash generation. That means it will not generate any cash. Then why is the word asset being used? Isn't it quite contradicting to each other? Fictitious and then asset. I told you that any asset, the definition, it will have some realizable value, it will have some benefits, it can give us some benefit, it will help us to generate cash, so many things. And today I am telling you that there is another type of asset which is called fictitious asset or nominal asset, and the main 2 features of this asset is that there is no realizable value and there is no cash generation from this. So what type of asset is this? Yes, there are assets like this. Basically, losses. If in case you have a loss and that loss is a prolonged loss, or maybe a loss of any 1 year also, right? Those losses, in order to tally the balance sheet, I repeat, in order to tally the balance sheet, those are shown in the asset side. Hence, they are to be said or they are to be understood as nominal asset or fictitious asset. What are the examples? The examples are many. Say like profit and loss account balance, that means the debit balance. Okay, and there can be any kind of suspense account. So there are many more examples in addition to these two. So nominal assets or fictitious assets are those assets which are actually not an asset, but only for the sake of balancing a balance sheet it has to be termed as a fictitious asset. It has no cash generation power, it cannot earn money for us. In general all assets do, and it is not having any realizable value. That means we cannot sell this asset to any third party and get money out of it. So these are basically losses which cannot be shown in the liability side, but it has to be shown in the asset side, naming it or terming it to be like a fictitious asset. And these are two examples which I have given you. In future we will give you some more examples. Okay, so now the topic that we're going to start rather the topic that we have started on yesterday and day before yesterday, I taught you about expenses. What are expenses? I told you that money spent to run the business activities properly, smoothly is called expense. What are the examples of expense? What are the examples of expenses? Many examples are there. There is n number of examples. Say I'll just write 2, 3 or maybe 4, 5. So one can be cost of goods, it can be rent expenses, it can be depreciation, it can be salary, it can be electricity charges. Many examples are there, many examples are there, right? But with this I would like you to join with the concept of expenditure. Expenses, I'll just repeat, expenses was when we spend money for the smooth conduct of a business, that is called expenses. Examples of expenses are given over here. With this I would like you to come to the topic of expenditure. Now what is expenditure? So expenditure, now what is an expenditure? Both sound similar, expenses and expenditure both sounds similar. The main difference, expenditure is money spent in connection to any asset. What type of money spent? Say to additional expenses, like transportation of an asset, not normal transportation expense. Say installation expense, say overhauling, say registration, and there are many other examples. So expenditure are money spent in connection to any fixed asset to bring it under working condition. I'll give you an example. Very simple example. Suppose we have bought a car. Okay, we have bought a car, and you all know that a car has to be registered. Yes, a car has to be registered, and then you can get the number wherever you are registering the car. Say in Siliguri, so WB74 and so on. If you don't register the car, then what will happen? What are the consequences of non-registering your car? First consequence is that you are not the legal owner of the car. That's for sure. You have not registered the car. Number two, if you take the car outside, then police will catch you, because as per the Motor Vehicle Act, maybe you are not supposed to carry any or ply any non-registered vehicles, and so on. So this money that we have spent on registration of this thing is our expenditure. Suppose we have a truck, we have a delivery van, that is our business related asset, delivery van. Now this delivery van, we are registering it. This expense is not an expense, but it is an expenditure because it is in connection to any asset. Suppose there are some machineries, the manufacturer of that machinery is say in Calcutta, we need that machinery over here in Siliguri. So what we have to do, from Calcutta to Siliguri we have to bring that machine. That machine, when we want to bring it, then it will incur transportation cost. Somebody will be there in the truck or in the lorry or whatsoever, they will bring that machine over here and that has to be installed. Now what is installation expenses? You can say fitting. See, most of the machines are not under working conditions. For example, say a computer. Okay, for example, say a computer. In computer, whenever you buy a new computer, you have to install so many things over there. You have to assemble the computer in case if you buy one assembled computer and all that. So you have to assemble the components, and then you have to install the Windows and all the software that you want over there. So these installation expenses are there. So these kind of expenses are actually not termed to be expenses, but it is termed to be an expenditure since it is in connection to any fixed asset. Okay, generally fixed asset, but it can be termed to be for all kind of asset, but most commonly expenditures are in connection of fixed assets, right? So expenditure are of two types. Expenditure are of two types. One is capital expenditure, the other one is revenue expenditure. Now capital expenditures are those expenditures which once you have spent that, the benefit will last for a longer period of time, more than 1 year. Please remember, capital expenditures are those expenditures which have been spent once and the benefit will last for more than 1 year. Generally, it is added to the cost of the asset. Generally, it is added to the cost of an asset. I'll give you another example. Have you ever heard anybody, when someone buys a scooty, there is two things that might have come across to you. One is called ex-showroom price and the other one is called on-road price. Now what is this on-road price? On-road price is that after buying the scooty, then those registration expenses, those road taxes and those insurance expenses together, it is called to be on-road cost, right? So see, that has been added. Okay, so capital expenditure are those expenditures, the benefit will last for more than a year. It is done in connection to the asset and it is added also to the cost of the asset. The major difference with a capital expenditure and a revenue expenditure is that the benefit will last for a year only or less. The benefit of a revenue expenditure will last for a year only, or it will last for a lesser period of time. Many examples: insurance, normal maintenance and repairs and all. Many examples are there. But as of now, please understand that capital expenditures are those expenditures, the benefit will last for more than a year. Revenue expenditures are those expenditures the benefit will last for a year or even less. Okay, but there's one more type over here, that is called deferred revenue expenditure. Very important, very important for you all to understand this topic. There's another thing that falls somewhere over here in between capital expenditure and revenue expenditure, because it has got the features of both capital expenditure and revenue expenditure. I'll tell you what it is. Basically, it is a revenue expenditure. Basically, it is a revenue expenditure, but the benefits will last for more than a year. More than a year. Now, what is it? चलो सुनते हैं, समझते हैं. Suppose advertisement expenses. So advertisement expenses is basically a capital expenditure or a revenue expenditure. Tell me what is it? Capital advertisement expenses or advertisements are what? Capital expenditure, revenue expenditure. What? Think I'm going to say the answer. It is basically a revenue expenditure. Advertisement expenses are basically a revenue expenditure. But do all things that we spend in the name of expenditure with advertisement cost, do the benefit last only within a year? There are many examples, and there are rather some examples where the benefits last for more than a year. Those kind of expenses are called deferred revenue expenditure. Example I was telling you. Suppose there is a advertisement board. There is an advertisement board. Now what board? See, on shop or at any shop, above that shop there is a board written. Suppose if I write Inox movies, so that Inox advertisement, that board, advertisement board, the shop name board, the board where the shop names are written, or say any advertisement that is there, the names of the shop, or say while we are moving in a train or maybe in a car, at the roadsides we see on many walls various various advertisements are written. Many examples and many advertisements are written. Do they last only for a year? That advertisement board lasts only for a year? No, it doesn't. It lasts for more than a year. Now let's take for example that the cost of that advertisement board is say 10,000 rupees. The name board in which our shop name is written, the price is say 10,000 rupees. Okay. So, and that board is supposed to be lasted for 5 years. 10,000 expense and it will last for 5 years. So in the current year, only in this year, that if you divide 10,000 rupees by 5 years, every year you get 2,000 rupees. So 2,000 rupees is your revenue expenditure, and the remaining 8,000 you have to show as a capital expenditure. Rather, this entire thing is termed to be a deferred revenue expenditure. Okay, with this thing which I was talking to you, 8,000 and 2,000 and all that, this is basically the profit and loss effect. This you ignore as of now. As of now you can ignore this, but try to understand this thing. So if anybody is asking, okay, for your revision, deferred revenue expenditure, you can say about advertisement expenses can be termed to be a deferred revenue expenditure. Basically these are revenue expenditures, okay, but the benefit will last for more than a year. So now we will start with the topic of income, which I was explaining you yesterday and day before yesterday. Income. What is income? And I told you that incomes are basically money that we receive is called income. Yes, that's true. That was only for you to understand it yesterday. but I will be telling you about income, about receipts, about profits, about capital receipts, revenue receipts, and everything. Now, see, suppose I am writing you a line: goods costing rupees 4 lakh sold for rupees 5 lakh. I thought of giving you such practical examples so that you get to understand things, because if I only define with those statements, then probably you might not understand everything. So here are, one thing is called as 5 lakh. We have another information called my 4 lakh, and there is another information that we have to calculate and get to, that is called 1 lakh. Now the question is, this 1 lakh is my income. Please remember, 1 lakh is my income. 5 lakh is my revenue. I repeat, 5 lakh is my revenue, 1 lakh is my income, and 4 lakh is my expenses. Isn't it beautiful? See, such a beautiful line. With one line, 3 topics covered nicely. Now let's go to the statement definitions and what they mean. So revenues is actually different from income. Understand, revenue and incomes are not same. So revenue is what? Revenue is the money that you receive from your operating activities. From any of your business activity, the money that you receive is called revenue. Now, suppose if I am a grocery shop owner. So if I am selling groceries, it is my revenue. If I am a furniture shop, I own a furniture shop. The furnitures that I will be selling is my revenue. Okay. But in case I am a grocery shop person, I have a grocery shop, and I sell some second hand furnitures, that I have old furnitures, if I have any with me, and that is of no use now, I am selling it off, that is not my revenue. So remember that revenue is something that is from my main business activity, and main business activity is called operations. I repeat, main business is called operations. I am not talking about any biological operation wherein a doctor is going and giving anesthesia and doing some cutting, shutting and all that, not that. But main business activity is called operations. So revenue is what? Activities by which I am getting some money, my main activities. So what is income? Income can also be called as surplus. Income can also be called as surplus. Actually, there are exact places where you have to use the word income, and there are exact places where you have to use the word surplus. Where and what you should use, that is again in the following classes we will discuss, and in the school we will discuss. But as of now, for you all to understand, since you people are very new in accountancy and commerce, so I am trying to make things simple and keep things interesting for you. That is why. So income. So what is income? What is the statement, or what is the definition for surplus or income? So income, you can say excess of revenue over expense is called income. Please focus this side. Please focus this side. This is a very important line. Excess of revenue over expenses is called my income. Okay, these are essentially to be there with my business activities only, with my business operations only. And expenses, I've already explained you. Expenses are something that we have to, that we have spent to carry out the business activities smoothly and properly. Okay, so now we have spoken about revenues, we have spoken about incomes, we have spoken about expenses, we have spoken about expenditure, deferred revenue expenditure, capital expenditure, revenue expenditure. Now next what? So sorry, not revenue, but say uh, capital receipts and revenue receipts. Now what are these two words? Actually, I thought of starting with you revenue receipts, and then I thought, okay, fine, let's discuss first capital receipt. That's why I have striked it off over there. So capital receipt and revenue receipt. This is a part of my uh, you know income and those revenues which I have explained you in the last thing. Capital receipt are those receipts which I am not going to receive every time. Basically, we will receive not every year is my capital receipt, which we receive sometimes once in 5 years, maybe once in 10 years, and so on. And revenue receipt is something that I'm going to receive every time. That I'm going to receive every time. Okay. So capital receipts are those receipts which is something which I'm not going to receive every time. Basically, it has to be transferred to my balance sheet. What is the balance sheet? That also I will tell you in future. That is tomorrow or maybe next day. And revenue receipt is something which we receive every time. Now let's take for example that for a normal business activity, what can be my capital receipt and what can be my revenue receipt? Revenue receipt can be my sales. Revenue receipt can be my commission. Suppose if I am a commission agent. Okay. But what can be a capital receipt? Suppose if I am not a commission agent, and then if I receive some commission, it is my capital receipt. Not getting na? Okay, easy language. By now many of you must have been knowing my name. My name is Anwar sir. I am basically a teacher, and so myself being a teacher, what can be my normal course of incomes? What can be my normal incomes? The salary that I am getting from my school. Okay. And suppose tuition fees, if I teach some students on tuition, then tuition fees. Okay. If I have some investment in the sense, say like if I have some money in the bank, then that interest I will get. Or if in case I have bought some shares or debentures or something like that of any company, then from that I will get. So these are my normal incomes. You can say them to be my revenue receipt, because this is what I will get in general. Now suppose a friend of mine has told me that you know so many people. Okay, I have a piece of land and it has to be sold. Can you please help me? I told, yeah, I can help you, that's not an issue. And uh, I told about this to some of my friends and some of the persons whom I knew, and one of the person has bought it. And say the price of the land which was bought by one of the person whom I knew, and that piece of land is of my friend, and say 10 crore rupees is the price of the land. And then the normal course of action says, like, if in Siliguri market, if anyone is helping to buy or sell any real estate property, at least 1% commission has to be paid. Okay, and say for that 10 crore rupees, 1% maybe say like 10 lakh rupees. 10 lakh rupees is something that I have received as commission from my friend. But remember, as I told you, I am not a commission agent, I am not a real estate broker, I am not a person who deal into these activities often, right? In fact, it was my friend for whom I did this. But since the market is saying that you have to give and take that 1% commission, so my friend also told that if there had been some other person, so I took, he gave, I took, and all that. But remember, this 10 lakh rupees which I received as commission is not my regular income, isn't it? It is not the income for which I am doing my activities. My main activity is this, I am teaching you all now. This is my main activity. So the salary, the tuition fees that I receive is my revenue income. But the commission on the sale of land, which I helped my friend to sell that land, that is not my main income. Okay, so that is a capital asset for me, because I'm not going to get this money every time. Okay, children. So as of now, please revise these topics which has been explained to you. If you're not understanding at any point of place, please rewind the topics properly. I forgot to tell you that you must sit with a copy and a pen, so that you can understand and you can write things that you're not understanding. You can get back to us, any teacher amongst us, as your doubt clearing thing. We will help you out, that's not an issue. And please complete the homeworks and the assignments that we are giving you, right? So stay safe, see you tomorrow, good day.